U.S. regulatory officials have arrived in Beijing seeking to negotiate with their Chinese counterparts on the issue of auditing compliance of U.S.-listed Chinese firms. The PCAOB will potentially send a larger team to China later this year to conduct on-site inspections of local auditors, according to a new report from Reuters, citing multiple sources. Will the regulatory standoff be resolved, or will Chinese firm finally face expulsion? Joining me today is former SEC chairman, CEO of Kalorama Partners, Harvey Pitt. Thank you so much for being here with us.
It's my pleasure to be with you.
For many years, the Chinese government has resisted PCAOB's inspection of Chinese companies' auditing documents. Recently, the China Security Regulatory Commission, CSRC, the PCAOB, and the SEC reached a mutual understanding under which China would fully facilitate PCAOB inspections. Can you please unpack this new development for us? Why did the Chinese government finally relent? Does this mean China may be resuming a market-friendly stance finally?
Well, first, I think it's important to note that the agreement is only between regulatory bodies. It is not between governments, and that is a significant issue, in my view, as to how meaningful this agreement is. But looking at the agreement as it has been reported, it would permit in certain circumstances PCAOB reviewers to review the audits of companies that are listed or whose securities are traded in the United States. If that goes through, that would be a major breakthrough, and it might well deter some delistings. But there's so much more to this issue than just what the regulatory agreement is.
My understanding is China may still consider asking some of its companies which hold sensitive data to delist from the United States to avoid granting full access to U.S. regulators, right? So what companies or what kind of companies, in your opinion, might have to delist in the future?
Well, I think any company that may be subject to a Chinese governmental directive that it not allow certain information to be made available to PCAOB reviewers or U.S. audit firms would be companies that are likely to suffer potential delisting. I think there is a great sort of overhang about this issue, and that is the current U.S.-Russian involvements over the Ukraine. Right now, we have a lot of verbal jawboning by both governments, Russia and the U.S. And I think China will be looking to see how concerned the U.S. will be, how dramatic its actions will be, and if there's any indication of U.S. weakness, I think that will ultimately encourage the Chinese government in connection with PCAOB reviews to take a harder line stance. So a lot will be riding on how the U.S.-Russia-Ukraine situation unfolds.
On the surface, investors seem to have been encouraged by the news. We saw shares of Baidu, which is previously identified by the SEC as one of the non-compliants, and Alibaba surged 5 to 10% on the news that a potential deal is in the offing, while the MSCI China's ETF jumped more than 5%. Do you think the market jumped the gun here? Do you see potential complications as negotiations between the two sides continue?
Well, if you look at this as a long-term issue, I think the market did jump the gun, but in the U.S. we have become a nation of day traders, unfortunately. So people are in and out of the markets, and seeing the agreement announced, there was a judgment made that maybe these stocks could be traded in the short term as if there would be an ultimate agreement. As of now, we don't even have a full permanent agreement. We don't know what the scope of it is. So anyone who's making an investment decision for the longer term based on this is probably making a serious mistake.
I also understand the details of the potential concessions, if there are any, from China are still in flux. So how do you think Beijing will address the issue of companies operating with a so-called variable interest entity, VIE structure? Basically, when a company sets up an offshore entity to skirt rules restricting foreign investment in sensitive industries such as media, telecommunications, which is how companies like Alibaba went public in the United States.
It was thought that companies using the VIE structure would be subject to Chinese governmental directives not to move forward. The proposed agreement would have a change in this and allow companies to seek the views of the Chinese government and, at least in theory, potentially be granted permission to go public that way. Again, I think we're a long way from a final agreement, and even after a final agreement, we're a long way from seeing how the Chinese government will actually implement it. But on the surface, at least, this appears to be a potential change that might benefit that structure.
So this regulatory issue has been a major factor dragging Chinese ADRs. We see the Nasdaq Golden Dragon Index is now at the steepest discount to the S&P 500 since 2008, tumbling over 57% over the past 12 months. Should fund managers sit on their hands and wait, or should they start thinking about dip buying?
I think fund managers get paid to make these decisions, and I don't get paid to pontificate. So hopefully for fund investors, their fund managers won't rely on what I say. Notwithstanding that, my view is I think this is a potential development, but I wouldn't be making the move to be investing or be bullish about Chinese securities, Chinese ADRs, and so on. I would, as you put it, sit on my hands and wait.
In the current climate of U.S.-China relations with so many frictions, in general, what's your evaluation of long-term regulatory risks associated with Chinese ADRs? How concerned should we be?
Well, as I mentioned, I think that there should be a concern for the following reason. The Chinese government is always going to protect what it sees as its interests, which is what all governments do and should do. But the Chinese government has the capacity to lay down restrictions or lay down rules or interfere with what looks like a progressive approach to relations between the regulatory bodies. As a result of that, I think people have to proceed with caution. In my view, the best agreement that could be reached would be an agreement between the two governments, the US government and the Chinese government, as opposed to an agreement between two regulatory bodies. I think for current purposes, one takes whatever one can get. But in the long term, I think without a clear commitment from the Chinese government itself, this is always going to be a very risky proposition.